Hello and welcome to Portfolio Matters. In today's My Worst Trade, I will be covering my latest disaster in the oil patch, Empyrean Energy, where I had a clear exit strategy, but I failed to execute it properly. Now, this My Worst Trade is going to be all about anchoring. And the definition of anchoring is the human tendency to accept and rely on the first piece of information received before making a decision. That piece of information is the anchor and sets the tone for everything that follows. Now, in investing, anchoring generally refers to getting fixated on a share price. So in general, people get fixated on their entry price. So they buy a share at, let's say, £1, and they've become fixated upon getting that pound back if the share price falls below £1, and they hang on, hoping to get back to their anchor. Now, it can also refer to just setting a price target and aiming for that price target and ignoring market signals. So, in summary, the lessons learned from this My Worst Trade are anchoring. Don't fixate on a number. If you fixate on a number, you cease to listen to the market. And in this case, the market was giving extremely clear signals about something we covered very well in previous episodes of My Worst Trade, i.e. insider trading. We'll come on to that in a second. In the build up to an event, insiders who know what the news will be either buy or sell the shares, and their actions reveal what the news is going to be. Now, the FCA has an extremely poor record of prosecuting insider trading, so expect this to continue. And the only thing you can do as a private investor is watch the actions of insider tradings and try and follow them. And in this case, the actions of insider traders were incredibly clear, and I failed to react. And finally, don't fixate on a date. Part of the reason that I failed to get out was that the well was expected to take 25 days to drill, but it didn't. It took 17. And so when there was a big sell-off in the shares, I just thought I confused the signal with the general sell-off in the market yesterday and failed to react. Actually, there's a great deal of uncertainty about the time it takes to drill a well, and I should have listened to what the market was telling me. Okay, so some background. Well, the background is that earlier in the year, I had another disaster with a wildcat driller, Advanced Energy. We did a share talk on it, and it was drilling the Buffalo well offshore Timor-Leste, which had an 85% chance of success, it said. Well, the well came in dry and the shares fell 85% on the day. And as a result of that, I did My Worst Trade on Advanced Energy, where I said that I will no longer be investing in wildcat drillers, that Portfolio Matters will not cover any wildcat drillers in future, and we'll only cover companies with proven assets or development assets. As a result of that, I did sell my wildcat drillers. So I sold Pantheon Resources before its exploration well came in, and actually the well came in and was considered a success, and the shares shot up. Well, there you go, sod's law. And I also sold my shares in Eco Atlantic, which is another wildcat driller. In both cases, the shares have are well above where I sold them sadly, but I held on to Empyrean Energy, which was drilling a highly anticipated wildcat well offshore China, the Jade Prospect. So just quickly, this is Pantheon Resources, bought it here, sold it there. Well came in and was considered a success, now £1.40, sod's law. And this is Eco Atlantic, and I sold at 30p, shares went up actually to 40p, although they have drifted back off. So Empyrean Energy, well, their Jade Prospect, if it was successful, they would own 49% of it. The Chinese National Oil Company would own the rest. And this was a big well. If it was successful, they were looking at a P50 case of 225 million barrels of oil recoverable. And they estimated the pre-drill chance of success was about 32%. But then during the drilling, they encountered a gas cap and they upgraded that chance of success to 65%. Okay, so a recap about what we know about wildcat drilling. Well, I did a podcast on this, and I will include a link in the description of this podcast, but the data show that oil companies tend to systematically overestimate their chance of success by around 50%. Therefore, you should take the company's stated geological chance of success and halve it. So when they were saying that there was a pre-drill chance of success of 32%, really, you're looking at about 16%. And when they upgraded that to 65%, I should have halved it to 32%. And we know that speculators tend to drive up the share price prior to the news of the well. And even if the well comes in successful, then actually developing that well and bring it into production can take years. And during that time, there's no new news, there's money going out of the company, and the share price tends to drift off. So as a result, my plan was that I was going to sell my shares in Empyrean in the days prior to the expected well result as speculators drove the price up. So my plan was to be 100% out of Empyrean prior to the well result. And I started executing on that plan. So this is share price of Empyrean. I sold around 12% of my holding at 12p and another 12% at 12.6p, which was frankly the recent high. And then I put in further orders at 12p and 12.5p, neither of which was hit. And my expectation was that the nearer we got to the well completion date, the more speculation there'd be, and that the shares would drift up, frankly, towards 14p was the idea I had in my mind. But it didn't work out that way. Actually, the shares started to drift off. And between the 19th, when there was this RNS saying that they'd encountered a gas cap, and the 25th, the shares drifted down. But I didn't react. I kept my target price at 12p. And then yesterday, the shares had a really bad day. They fell 25% over the course of the day. And there is absolutely no clearer signal of insider trading. But as you'll all be aware, yesterday was a bad day in the market. And I checked the bulletin boards. Nobody seemed to know anything. And to reiterate, according to the schedule that Eco Atlantic had published, the well should have been completed around the 5th of April. So I thought it was just people panicking and I failed to react. And then today, the well came in dry. The shares down 60% on the day, down 80% from the price at which I sold the first two tranches, i.e. 12p and 12.6p, and I sold the remainder of my shares at around 2.5p. So overall, having sold around 25% of my holding at 12p and above, I ended down around 15% on my total portfolio. But yesterday, if I'd just taken the prices available, even at 9p and above, I would have ended well up. My average price was about 5.6p. So, in summary, once again, the lessons we learned from Advanced Energy have proved to be absolutely true. Again, wildcat drillers just don't seem a very good investment. They seem to overestimate their pre-drill chance of success. And the specific lessons learnt from this, my worst trade, are don't anchor, don't fixate on a number. I was fixated on getting 12p. And as the share price drifted off, I had ample opportunity to get out at 11p. And frankly, as shares drifted off yesterday on blatant insider trading, there is no better and clearer signal than the fall in the share price of 25% yesterday, which clearly showed that insiders were willing to get out at any price. Then I could have got out at 9p and above, but I failed to react. And as it is, I let a good profit on Empyrean turn into a loss. Okay, that's it. Please can you press like and subscribe to the channel. And it's goodbye from me, Keith Jordan. Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information, nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.